Hello, my dear students. Let's wait for a couple of minutes and then we'll begin the discussion, my dear friends. In next 2 minutes, we'll start. Yes. Hello, my dear friends. Welcome you all to discussion on CA Inter RTP of May 2024 attempt with respect to the part of GST. Now, when I talk about the CA Inter taxation, which is for about 100 marks, RTP we have got 3A and 3B part. 3A is about income tax, 3B is about GST. And this 3A part of income tax in the previous session already we have covered. But in today's session, we'll spend some very good time on discussion about the component of 3B, which talks about GST, which is also worth for about 50 marks for our examination. And we all know that in our syllabus, now we have also got the topic of place of supply, TDS and TCS. Even these topics have been brought in our syllabus for May 2024 attempt. So it is important that we spend some very good time on discussion about these topics also. I'm talking about this especially to those students who already wrote the exam in November, but for some reason couldn't clear it and now writing in May 24 again. But those who are writing in May 20 for the first time, it doesn't make any difference for you. For you, everything is the same. Whatever content we have discussed, that itself is full and final. So what we'll do is, my dear friends, now we'll spend some good time on discussion about some interesting points with respect to CA Inter GST RTP paper 3 part B. In short, we call it as 3B part. Let's look at that. Let me share the screen, my dear friends. 1 second. Yeah. Good. I'm sure the screen is visible for all of you. Fair enough. Sounds good. So paper 3 is taxation, my dear friends. In that 3A is income tax law. That part already we have done the discussion. And some interesting question we have discussed, especially with respect to life insurance policy, term insurance policy, and all. Some good discussion we had in the first bit. And after that, we discussed from some problem solving based questions. Right. Now, let's move on to GST, my dear friends. Come on. Let me just scroll it. Yeah, here comes the GST part, that is goods and services tax, wherein we are going to talk about some interesting elements of this RTP May 2024 attempt, my dear friends, wherein some good points are there in this particular RTP. And it's inevitable and it is important that we need to understand them in the true spirit of the law. So let's look at that, my dear friends. Come on. The first interesting question, and of course, we all know that the first question will always be a case study based MCQ. We need to understand the case properly and answer the multiple choice question. Let's see that. The first bit. ABC Limited has its manufacturing unit in the state of Rajasthan. So in the state of Rajasthan, they have got a manufacturing unit. Further, it has ancillary units in the state of Madhya Pradesh and the state of Gujarat and registered in each of the state. So friends, basically they are registered in Rajasthan also, Madhya Pradesh also, Gujarat also. Moreover, ABC Limited owns and operates a hotel in Udaipur, Rajasthan. Wow. So they have got manufacturing business and they have also got one hotel business in Udaipur, Rajasthan. In addition to the aforesaid, ABC Limited owns a commercial space which is rented out to a registered person at a monthly rent of 50,000 per month. We all know that renting of a residential building for residential purpose that is exempt in GST, but in any other case it becomes taxable. And in residential also, if a residential property is given on rent to a registered person, that is covered under a reverse charge mechanism. But in this particular question, we are talking about commercial space. So there is no question of RCM coming into picture. Next. The maintenance of the premises is the responsibility of ABC Limited itself. That means the lessor only is the responsible person. In pursuance of the same, during the month of April, ABC Limited incurred certain expenses on purchase of maintenance-related materials. That means they purchased some materials for the purpose of maintenance of that commercial space. The said expenses are recoverable from the tenant along with the invoice issued for the rent. And the rate of tax applicable on the materials used for maintenance was 5%. Wow. But you have to understand that this is nothing but a composite supply. Wherein the composite supply, the principal supply is renting of commercial space, and whatever maintenance activity is being done, that is nothing but an ancillary service. And in case of composite supply, we all know the fact, my dear friends, composite supply is taxable at the rate of principal supply. Because recovery of, recovery of that expenses is an integral part of the rent what is being charged. The principal supply is the renting of commercial space. That is only important element for us. Next slide. During the year, ABC Limited agreed to provide the hotel to Mr. X for a business conference to be held at Udaipur. Mr. X is unregistered person residing in Maharashtra. Okay, so what? Udaipur, Rajasthan. Good. ABC Limited made a supply of machine in the month of June, the details of which are as follows. The basic price of machinery before TCS is 45,000 rupees. That is the basic price of machine before TCS and income tax. Very good. Already we discussed in value of supply chapter. TCS under income tax will not be included in value of supply. Already we discussed that, my dear friends. Next slide. TCS under income tax 2,500, that is not included in the value of supply because TCS is only an interim levy which is not having the character of tax. Next point. It received a subsidy of 3,500 from Green Foundation Private Limited. Let's recall subsidy concept. As per section 15(2)(e), any subsidy linked to the price shall be included in the value of supply except subsidy from central government or state government. Here what did they say? It received subsidy of 3,500 from Green Foundation Private Limited for usage of green energy. And the subsidy was linked to units of energy saved. It was linked to what? Units of energy saved and not aforesaid machinery. That means subsidy is not linked to the price. Subsidy is included in the value of supply. Only that subsidy is linked to the price and it is not coming from central government or state government. And in this case, they have clearly told that subsidy was linked to units of energy saved but not to the machinery. So this kind of subsidy will not be included in the value of supply. Next slide. In addition to the aforesaid transaction, ABC Limited has spent an amount of 5 lakh rupees on procurement of certain goods which were distributed as a part of corporate social responsibility. Wonderful. Very good. In fact, as per section 135 of Companies Act, it is mandatory that some companies are required to mandatorily spend the amount for the purpose of corporate social responsibility. See next line. During scrutiny proceedings in the state of Gujarat, jurisdictional GST officer has asked ABC Limited to submit the copy of audited financial statements for Gujarat and was of the view that ABC Limited is required to get its accounts audited by chartered accountants separately under GST law. Friends, under GST law, chartered accountant audit has been removed. We know that, right? The concept of GSTR 9C reconciliation statement is applicable only to those whose aggregate turnover is more than 5 crores. And that too, moreover, it is only a self-certified reconciliation statement. There is no requirement of chartered accountant's signature on that for filing annual return and reconciliation statement in each case. Next line. All the above amounts are exclusive of GST wherever applicable. The rate of GST on all inward outward supply is 18% unless otherwise specified. Fantastic. Next slide. Assume that there is no other outward or inward transaction apart from a aforesaid transaction. Based on the facts of the case scenario given below, choose the most appropriate answer to question number 1 to 5. We have to choose whichever answer is most appropriate. First bit. For the transaction related to renting of commercial space, what would be the rate of tax, my dear friends? Obviously, the rate of tax is 18%. The rate of GST on rent and machine related recovery shall be 18% only, my dear friends. Because I clearly told you the logic why it is 18%, because it is a composite supply. And in case of composite supply, my dear friends, they are taxable at the rate of principal supply. And the principal supply is renting of commercial property. Next line. Compute the value of supply under section 15 made by ABC Limited in the month of June. Value of supply, we discussed that basic price is 45,000. TCS under income tax is not included. Subsidy from green furniture, that is also not included because subsidy is not linked to the price. So what figure we'll take is only 45,000 rupees. So that itself is the value of supply. So the answer is option A, my dear friends. Value of supply is 45,000. Next point. With respect to hotel accommodation service provided to Mr. X, GST payable by ABC Limited is what? Nil. GST is payable and reverse charge? No. Nil. GST is exempt? No. In the nature of CGST, SGST? Excellent. That is the answer. Because in case of hotel accommodation, as per section 12.4, my dear friends, we clearly know that with respect to, in fact, sorry, 12.3, my dear friends, accommodation, that is immovable property. Place of supply is the place where immovable property is located or intended to be located. Obviously, my dear friends, in case of hotel, obviously, in case of stay, they'll definitely charge CGST and SGST because place of supply is the place where property is located or intended to be located. Next. Which of the following option is correct with regard to availability of ITC in respect of GST paid on procurement of goods meant for corporate social responsibility activity? My straight answer, 1 rupee also input tax credit will not come because he is using that goods for the purpose of providing corporate social responsibility, which is not taxable. When it is not taxable, then where is the question of claiming credit? So the answer will be the amount of ITC related to procurement is not available. So answer is option A, my dear friends. Next point. Which of the following option is correct with regard to advice given by GST officer? There is no requirement of separate audit of financial statements from the perspective of GST provisions. Excellent. That is the answer. Because they removed the concept of audit by chartered accountant or cost accountant. It is henceforth only self-certified reconciliation statement. Option B, reconciliation statement should be audited by chartered accountant. No. Annual return as well as reconciliation should be audited by chartered accountant. No. Separate audit of financial statement at each state level is required by ABC under GST law. That is also not a correct answer. That's it. That's the story of this interesting case study based question, my dear friends. A very simple, short, and sweet question, which I'm sure is very scoring for all of you, and you guys can tackle this kind of question very confidently in the examination. Make sense, right? Everybody, my dear friends. So that's the end of story for case study based MCQ. Now let's look at the next interesting question. Question number 6, my dear friends. Cute and Co, a partnership firm, registered supplier under GST in Bengaluru, Karnataka state, has provided following information for the month of October. Intrastate, who is providing service? Qt and Co partnership firm. Keep that point in mind. Partnership firm. Intrastate taxable supply of direct selling agent service to a public sector bank. Straight answer, my dear friends, this is taxable. Your brain might start telling, sir, direct selling agent is covered in RCM, right? The answer is no. In case of direct selling agent, RCM will come into picture only when the supplier is a individual direct selling agent. But in this particular case, if you observe, supplier is a partnership firm. Since it is partnership firm, it is not a direct selling agent. It is not a individual. It is not covered in RCM. Next slide. Service provided to governmental authority by way of sanitation conservancy. This is straight away exempt, my dear friends, specifically covered in exemption list. Next. Rent paid. What is that line, my dear friends? Rent paid to a residential dwelling taken for running office for providing DSA services. Owner of the property was not registered under GST, and this is an intrastate supply availed. So straight answer, my dear friends, this transaction will be covered under a reverse charge mechanism because supplier is giving what on rent? Residential property on rent. And what is the receiver? Receiver is the registered person. So obviously this transaction is covered under RCM, my dear friends. No doubt about it. Next. Purchased a car for official use of managing partners of the firm. Even though it is for official use, my dear friends, we clearly know that in case of purchase of car, input tax credit is not allowed. For a fundamental reason being, as per section 17(5)(a), car is a block credit. But the previous point, on that 25,000, on this 25,000, whatever tax we are supposed to pay under RCM, my dear friends, first we will pay tax under RCM, then we can again claim input tax credit. That is always there. Whenever we are required to pay tax under RCM, we will pay tax under RCM using electronic cash ledger. And that tax, what we paid under RCM using electronic cash ledger, we can again claim it as input tax credit. That concept is always there. Next slide. Availed information technology services for their business from partner's friend, Alan Ward from Melbourne, Australia. Mr. Ward has refused to take any consideration. Open market value is 1,25,000. So it is a case where without consideration. In without consideration, we know the point. Import of services by a person from a related person or from any of his establishment outside India. And here it's a case where it's an import of service without consideration and it is not coming from a related person. When it is not coming from a related person, it is not a supply at all. When it is not a supply at all, there is no question of GST. Getting what I'm saying, my dear friends? Very, very interesting line. Next. Provided training and performance appraisal services, section 12(5), place of supply. Yeah, to the following persons. ABC Private Limited, a registered supplier in the state of Kerala. So this transaction, when I say Kerala, my dear friends, when recipient is registered person, place of supply will be location of such person. That means nothing but Kerala. So on this 3 lakh, we will charge IGST because supplier is where? Karnataka. Place of supply is where? Kerala. If the location of supplier and the place of supply both are in different state, we call it as interstate supply, and on that we will charge IGST. Next slide. Babu Cones, a proprietorship concern of Rajasthan, which was not registered under GST. If it's not registered under GST, place of supply will be the place where services are actually performed. Clear, friends? That means nothing but place of supply will become what? Place of supply will become Karnataka state, and what we'll charge is CGST and SGST. Getting my point, everybody? All of us? Good. Next point. That's it. That's a student's interesting question number 6, my dear friends. That's how you have to solve that particular question. Make sense? Good. Question number 7. From the following information provided by Sasta Bazaar, determine time of supply for purpose of payment of GST. First point. It issued a coupon on 20th June 2023 worth 2000 rupees, redeemable against purchase of specific plastic items. Coupon was redeemed on 31st July 2023. Friends, we all know that in case of time of supply, section 12 deals with time of supply in case of goods, 13 deals with time of supply in case of services. And we're talking about goods here, so apply section 12. And in case of vouchers, time of supply is determined by applying section 12(4), which says that if supply is identifiable, time of supply will be date of issue of voucher. And if supply is not identifiable, time of supply will be date of redemption of voucher. In this particular case, that voucher is redeemable against purchase of specific plastic items. That means supply is identifiable. In that case, time of supply will be the date when the voucher is issued, which is nothing but 20th June 2023. Second case, it issued a coupon on 1st August 2023 worth 3000 rupees, which is redeemable against purchase of any item. This coupon was redeemed on 18th August 2023. When we say that redeemable against any item, that's a case where supply is not identifiable. When supply is not identifiable, time of supply will be the date of redemption of voucher, which is nothing but 18th August 2023. Third point, it received interest of 10,000 rupees for late payment from a customer on 11/11/2023 for supply of goods which was originally made on 24/6/2023. Now, in case where there is an addition in value by way of interest, late fee, penalty, etc., time of supply is determined as per section 12(6), which clearly says time of supply will be the date when addition in value is received. When that interest, late fee, or penalty is received by the supplier from the recipient, that date only will become time of supply, which is nothing but 11/11/2023. That's the story of this interesting question number 7. A very easy question. Good. Next question, guys. Question number 8. With reference to GST law, determine place of supply with reasons in the following independent circumstances. Number 1. Miss Kanika of Kolkata, West Bengal, visited to Jodhpur Law University, Rajasthan, and paid her college fees by purchasing a demand draft from a bank located at university campus. Miss Kanika did not have any account with the bank. But the point is, as per section 12(12) of IGST Act, banking and financial services, my dear friends, place of supply will be address of the recipient on the records of supplier. So in simple terms, my dear friends, section 12(12) of IGST Act clearly says the place of supply will be the location of recipient on the records of the supplier. But let's say, for example, if the location of recipient is not available on the records of supplier, place of supply will be location of supplier. If you observe very clearly here, Kanika did not have any account with the bank. That means bank does not have the address of Kanika. That means bank doesn't know that Kanika belongs to West Bengal. In that case, my dear friends, place of supply will become Rajasthan. That means nothing but Jodhpur, Rajasthan. 12(12). Next. Mizu Machine Limited, registered in the state of Andhra Pradesh, supplied a machine to KN Wind Farms Limited, registered in the state of Karnataka. However, this machinery was assembled and installed at the windmill of KN Wind Farms Limited, which is located in the state of Tamil Nadu. Friends, for this particular second bit, my dear friends, place of supply will be determined as per section 10(1)(d). 10(1)(d) talks about place of supply in case of goods assembled or installed at a site. Place of supply will be the place where goods are assembled or installed. So as per section 10(1)(d), my dear friends, place of supply will be Tamil Nadu, because that's the place where the goods are installed. See, these all questions are on interesting elements which are of high importance, my dear friends. Next point. Question number 9. Happy Constructions Limited, a registered builder under GST. They are what, my dear friends? A registered builder under GST in Bangalore, Karnataka, has got permission to build 5 floors from municipal projects for one of its projects at Surajnagar. Aditya Construction, a neighboring housing project. What is that? A neighboring housing project. Approached Happy Construction Limited to discuss regarding blockage of sunlight issue arising out of construction of 5 floors. Wow. See, they have got permission to construct 5 floors. But the other person who is next to us, he is coming and telling us, if you construct 5 floors, we'll get blockage of sunlight. And asked it to build only 3 floors, for which 20 lakh was offered as compensation. So this transaction is very clearly a supply, because agreeing to an obligation or refraining from an obligation, agreeing not to do is also an activity, my dear friends. Doing something is an activity. Not doing something for consideration is also an activity. That transaction is very clearly a supply. Agreeing to an obligation to refrain from an act is also very clearly a supply of service. It may be noted that Happy Construction agreed to the offer. It may be noted that Aditya Construction is not ready to pay any further amount to Happy Construction in addition to the amount already offered. That means this 20 lakh figure is including GST. Briefly explain with current legal provision with whether the above amount as compensation is liable to GST. Of course, yes, it's a supply as per section 7, schedule 2. It is supply of service. And if considered taxable, calculate total GST payable. Assuming rate of GST is 9% each. 20 lakhs into 18 by 118 will become the total GST. In that, we'll split between CGST and SGST. We'll get your answer. And this is a case where there is an express or implied contract or agreement between Happy Construction and Aditya Construction. And the consideration is flowing in return to that agreement. Clear, right? They have 5 floors permission, but they're constructing only 3 floors because the counterparty is telling you construct 3 floors, I'll give you this much consideration. It's a clear-cut contract. Make sense? Brilliant. Next point, Bewitch. Aggregate turnover of Mangal and Co. registered person for financial 22-23 was 8 crores. It approaches you as GST consultant for the issue of e-invoicing. Straight answer, e-invoicing is applicable. E-invoicing is made up mandatory for those whose aggregate turnover exceeds 5 crores, my dear friends. If aggregate turnover is more than 5 crores, the concept of e-invoicing is applicable. And that's only for B2B transaction, but not for B2C transaction. So it is mandatory for Mangal and Co. to issue e-invoice. What else they asked? Also list out the entities which are exempt from mandatory requirement of e-invoicing. Simple answer, special economic zone units, GTA, that is those who are engaged in transportation of goods by road, supplier of passenger transportation service, insurance company, banks, NBFC, government department or local authority, person supplying service by way of admission to exhibition of cinematograph films in multiplex screens. These all categories of persons are exempted from requirement of e-invoicing, even though their aggregate turnover is more than 5 crores. Getting clarity, my dear friends? That's the interesting story of question number 9. Sure, wonderful. Come on, my dear friends. Now let's look at question number 10, my dear friends. Ramlala Enterprises, registered in Delhi, is engaged in supply of interior decoration service to Andhra Bhavan located in Delhi. So the moment one entity is giving service to another entity and the recipient, see here, service contract is entered with government of Andhra Pradesh, registered in Andhra Pradesh. So when recipient is government and the contract value is more than 2,50,000, TDS will come into picture, which talks about tax deducted at source. The contract value inclusive of GST is 15,50,000, and the payment for the same is due in October 2023. First of all, what is it they're asking? First bit, my dear friends, come on. You are required to determine the amount of tax if you need to be deducted, assuming the rate of CGST, SGST, IGST is 9918. Will the answer be different if Ramlal Enterprise is registered under composition scheme? First of all, the concept of TDS is applicable as per section 51, my dear friends. Whenever there is a contract value, that is total value of supply under a contract exceeds 2,50,000. When the recipient is a department of central government or state government or a local authority or governmental agency or an authority or board which is set up by the government, public sector undertaking. In all these cases, the concept of TDS is applicable. Here, if you observe carefully, the contract is 15,50,000 inclusive of GST. So even before GST also, if you see, it is more than 2,50,000. But there is a catch point. Who is supplier? Ramlal Enterprise registered in Delhi. Who is recipient? Government of Andhra Pradesh registered in Andhra Pradesh. what is the place of supply for this particular contract, my dear friends? Internet declaration service as per section 12.3. Place of supply in relation to immobile property shall be the place where immobile property is located or intended to be located. So place of supply, where is the property located? Delhi. Location of supplier is Delhi. Place of supply is Delhi. In section 51, there is one special point which says that if the location of supplier and the place of supply is in one state and the location of recipient is in another state. Let me repeat once again, listen carefully. If the location of supplier and the place of supply is in one state and the location of recipient is in another state, then the provisions of TDS under section 51 will not apply. So provisions of section 51 TDS will not apply in case where location of supplier and the place of supply is in one state, but the location of recipient is in different state. That is the case in this particular question. So in this particular question, provisions of TDS will not apply even though contract value is more than 2,50,000. Next. Will your answer be different if Ramnal Enterprise is registered under composition scheme? Answer is no. My answer would still remain the same. Next slide. Examine the implications of GST on supply of food and beverages at cinema hall. It is as good as a restaurant service. They are liable to pay GST at the rate of 5%. Supply of food and beverage at cinema hall is as good as supply of food at eating joints. Because in cinema theaters, what happens? They sell popcorn, samosa, whatnot. Different snack items they sell. It's as good as they're acting as an eating joints or restaurant. It's clearly a restaurant service. And it is taxable at the rate applicable to the restaurant service. So friends, that is the story of this interesting, very interesting RTP May 2024, my dear friends, which is an interesting concept which you need to understand very clearly. And that is a fundamental reason why we have spent so much of time on discussion about this RTP. And we'll keep this video live on YouTube. Any doubts, any queries, anytime you have got, you can feel free to comment. We'll be more than happy to reply. So that's the end of story of CA Inter Taxation RTP. In the previous session, we covered income tax. This session, we have covered GST. And that's the end of story of our RTP discussion for May 2024. That's it, my dear friends, from Shiva Teja's side and Indigo Learn side. So I wish you all the very best and I wish you all success. Do write really well and prepare really well for the coming days what you have got and do come out with flying colors. Any doubts anytime, feel free to get back. Thank you. Bye-bye. Shiva Teja signing off.